Hey, everybody, welcome. Here we are. It started up smart. And guess what? I brought you one of the smartest people I know. He's a CPA. His name is Rick Ainge. I'm going to let him talk in a minute, but I'm going to talk about him for a minute as well because I like doing that. I love talking about my friends in a nice way. Rick was my CPA for a while. When mine went missing for a year or two, she came back, and here I am. But anyway, truly, to become a CPA, you actually have to be a smart individual. You have to actually pass tests, lots of them, ran by the government
anyway.
Yeah, and the whole thing. Now, he may have forgot half of what he learned, but I tell you what, he's probably learned a whole lot more since then. And we flipped a coin, and we had two topics, EBITDA or basis. Both. If you don't know about them, you need to know. Folks, this is the session that if you're going to take notes, get your pen, get your paper, because we're going to talk about two terms that most entrepreneurs don't understand and need to understand. And I'm sure Rick, we've laughed about this a little bit when he looks somebody in the face and says basis, and they go, huh? You know, like that dog who doesn't know where they're at kind of thing, you know, that head tilt. Anyway, basis is the topic today. Stick around. Don't go anywhere because I'm going to offer you a ticket for $99 to the Startup Smart event today by the time we get to the end of this call. So, Rick, here we are. It's time for you to talk and me to shut up. Anyway, I want to talk about basis today. Can you educate this audience on what basis is and how it works?
I can do that. Most people have no idea that basis is even a thing, and the ones that do really don't know much about it. But basis is one of those things that and you mentioned it earlier, if you don't know about it, it can come back to bite you in the butt. It's probably one of the least well-known but most important items in taxes that exist. So let's start out with some really simple explanations of what basis is, and then because basis is super complicated. You can explain it from a really simple standpoint, but when you dive into the details, it's super complicated. So we're going to start with a really simple definition of what basis is. In its simplest form, basis is cost. What did I pay for something? The true definition of basis is your after-tax investment in an asset. Okay, so we're going to start with something really simple. So, a lot of my clients, not all, but a lot of my clients are in the construction industry. So we're going to start with an asset that a lot of those construction clients own, and that's a backhoe. So what's my basis in that backhoe that I bought to service my client, my construction client, the construction company clients? So basis is cost. So in that backhoe, from the very simplest standpoint, my basis in that backhoe, the minute I buy it, is cost. I paid $80,000 for that backhoe. So at that point, my basis in that backhoe is $80,000. Okay. Right. So that's pretty simple, easy to understand. Now, year one, when I do my taxes, I'm going to take some depreciation on that backhoe. I'm going to write off some of the costs. And so year one, I'm going to expense $20,000 in depreciation on that backhoe. I've wrote off that $20,000 through depreciation. That lowered my basis. Now my after-tax investment in that backhoe, my basis is now $80,000 minus the $20,000 that I've recovered through depreciation. It's now $60,000. So that is, and then each year as I take more depreciation, my basis is going to drop by how much depreciation I'm able to recover, I'm able to write off and get tax benefit out of. So that's the simplest form of basis, cost. What did I pay for it? And then we have to calculate my adjusted basis, which is, okay, my adjusted basis is cost minus the amount of depreciation I've taken, the cost I've recovered through deductions on my tax return. Okay, so that's really simple. Why is basis important from this simple standpoint? Well, if I turn around and sell that backhoe a couple of years after buying it, I might sell it for $60,000. And even though I paid $80,000 for it, that's not my basis anymore. My basis has been reduced by the $20,000 I wrote off in year one, the $20,000 I wrote off in year two. So now my basis, instead of being 80, is 40,000. And so if I sell it for 60, I'm going to have a $20,000 gain that I'm going to get to pay tax on. Even though I paid $80,000 for it. Okay. So that's why basis is really important as we talk about it from that simplified standpoint.
Okay. So the backhoe cost me 80 grand.
Now,
I wrote off 20 grand my first year. I wrote off 20 grand my second year. I'm at $40,000. I sold it for 60, which is a $20,000 increase to me that I'm paying taxes on. My basis was $40,000 in that asset.
Exactly.
Okay, so, got it. Hope everybody else is getting this.
We're going to go a little bit more extreme, okay? And then we're going to get into really, truly why basis is important from a business owner standpoint. And Joe, I already know you understand this, but
I hope so.
We're going to go a little more extreme on this simple example. So for the last several years, the default depreciation method on assets like backhoes has been 100% bonus depreciation. That means in the year that I buy it, I write 100% of it off in that year. Right. You can elect out of that, but that's been the default. So year one, I buy an $80,000 backhoe. I do my taxes that year. I expense 100% of it through bonus depreciation. And now what's my basis? Zero. Yeah. I've written it all off. I have no basis in that asset anymore. Year down the road, I sell it for $60,000. I'm paying tax on all 60 because my basis in that is now zero. Okay.
Wow. Okay.
Now let's go into why basis is truly important for a business owner. So if I structure my business as an LLC, whether it's taxed as a partnership or taxed as an S corp, which a lot of our clients are, they're LLCs taxed as S corps. Some are still taxed as partnerships. It depends on what's best for their situation. But for those entities, the partnerships and the S corps, if I have a loss, if I have a year where business wasn't so good, I have a loss, or maybe I just spent a lot of money buying equipment or assets that I'm depreciating heavily up front. And so, because I want a tax benefit from it, I may or may not, even though I generate a loss in that business for that year, that LLC, that partnership or S corp, I may or may not be able to deduct that loss on my individual tax return. And one of the key thing that determines whether I can or not is what's my basis in my ownership in that partnership or S corp.
Yep.
So not only do individual assets like backhoes have basis, but a person's ownership investment in a partnership or an S corp also has basis. Yes. So this is where basis gets pretty complex, but where it's even more important. So another aspect of that, and we're going to dive into some of the complex technicalities of this, how basis is calculated, how it works, but it not only from a perspective of, well, okay, I have a loss in my S corp this year. Can I deduct that loss on my individual return? Basis comes into play there. But also, let's say Joe decides he wants to buy my accounting firm. And I decide maybe I'm going to sell my accounting firm to Joe. How much tax I'm going to pay on selling my business to Joe is also determined by that basis.
Yes.
Okay, so what is basis when you talk about a business? Again, the definition of basis, it's your after-tax investment in the business. Okay, so when I explain basis to clients who have never heard of basis before, much less understand what it is and how it works, one of the analogies I give is basis is a lot like a bank account. Okay, so my basis, just like my bank account, starts at zero. I open a bank account, I don't put any money in it yet. Yep. It starts at zero. I start a business, and before I put money in or anything else, my basis is zero. And then just like deposits increase your bank account, withdrawals decrease your bank account, there are things in business that increase your basis from that zero, and things that decrease your basis from zero or from whatever it is. So things that increase your basis are if I put money in the company. So I start a company up, it's got to have some capital to work with. So I pull $50,000 out of my personal bank account and I invest it in the business to have some working capital to get that business off the ground. That investment of $50,000, that increases my basis. Other things that increase basis are year one, I finish the year, I do my business tax return for my S Corp, and I made a profit of $30,000. Okay, I'm going to get a K1 from that S Corp return that says, Rick, you made $30,000. Congratulations, you get to report this as income on your individual tax return and pay tax on it there. Doesn't matter whether you pulled it out of the company or not. You get to pay tax on it. Well, that profit on my K1, that increases my basis because I'm paying tax on it. So my after-tax investment went up because I paid tax on that $30,000. So profit, my share of profit from my business increases my basis. Conversely, if my business has a loss, that loss reduces my basis because hopefully if I have enough basis, I can pass that loss through to my individual return, deduct it there against my other income, and it reduces my taxable income and my tax liability, reduces my basis. Also, the other thing that affects basis is I told you if I put money in, that increases my basis. If I take money out, if I take a distribution, that's going to reduce my basis.
Yes.
Okay, so all of these different things affect basis. Money going in increases it, money coming out decreases it, profit increases it, losses decrease it. So
it's a complicated topic, Rick. I think you gave a great explanation. And I got to tell you, one of the first times I came up against basis and didn't really quite, I understood the term, but the way it affected me, I had money invested in a business. I was exiting a business. I was getting a big check and then some other stuff coming along the way. But I still had this unpaid investment that I made early in the business. And somebody said basis. And I went, huh? And got the explanation, went, oh, okay, that helped me. Got it. Check. I'm in. And that, it could be a complicated term, but I just think as business owners, Rick, they have to understand this. If you're going to be a business owner, you need to understand basis. It is complicated. It can be complicated, but it can also be a fairly simple aspect and topic of your business, just like Rick has explained. You buy a backhoe for $80,000, right? You take $20,000 on depreciation the first year, $20,000 the second year. Your basis is $40,000 on that asset. And then, of course, you go to sell it for $60,000. Guess what? You're now paying taxes on the 20. And anyway, basis comes into play. And yeah, awesome stuff. Any last words on basis, Rick? We're running short on time.
All right. Well, just one quick thing, and that is one other place where basis is important comes into play is we mentioned distributions reduce your basis.
Yes.
If you take enough distributions in a year out of your partnership, your LLC, that that takes your basis to zero. In other words, if your distributions in a year exceed your basis, and you might wonder, well, how can that happen? If I have basis, if I don't have enough basis, how can I have money in the company to take distributions? Well, maybe the company borrowed money and put money in the bank and then decided, we're going to distribute money to the owner. If you take distributions out of a company in excess of your basis, you created taxable income. That can bite, that can hurt. So a couple of reasons why basis is super important to understand, and even more important when we talk taxes.
I love it. Well, Rick, I appreciate you very, very much. Folks, listen, basis. It's a topic you need to understand. If you're growing your business, you're going to sell your business, you're going to just operate your business, make sure you have a qualified CPA like Rick, who can actually walk you through this stuff so you understand it. And like I said, I've been a customer of Rick's. He's great at just giving me that basic explanation, so I had comfort and peace of mind that he understood it. He explained it to me. I understood it. And now I knew what I was being taxed on or not taxed on, which is super important. So anyway, last thing, folks, listen, I wanted to share with you a way to get a ticket for just a mere $99. Listen, there's only 320 seats, and there are not even 300 seats left. I mean, we're starting to see some tickets move. We really, really want you to be able to take advantage of this. And there is a coupon code, Utah 2024, that you see scrolling across the bottom of the screen. If you go to startitupsmart.com, you will see this website. And when you get there and you scroll to the bottom down here to buy a ticket, what you're going to see is a coupon code right there. If you'll put the coupon code Utah 2024, the ticket price will not be $349. It'll be $99. And that's a bargain, a bargain, a bargain. I have a math professional right in front of me. He's shaking his head. It's a bargain. So, folks, listen, take advantage of Started Up Smart. We will be there. Rick will be there. He will be there to answer your questions in the hallway, right? Or at lunch.
Absolutely.
I mean, yes, we will all be there to help you grow your business. That's why we're here. We're here to serve you. So anyway, we appreciate you. Rick, I really appreciate you today and the explanation of basis. And I promise I'm going to bring you back to talk about EBITDA, which is going to freak everybody out even a little bit more. And we might have to have a slide for that one. I don't know. Rick, have a wonderful day. Thank you so much. And thank you, everybody. We appreciate you. Have a great day.